I want to kickstart this panel by talking about the latest innovation in crypto capital formation, which is the IEO. And Dorjee, you as the CEO of blockchain startup Perlin Network have firsthand experience launching an IEO. You had raised $6.7 million not too long ago. If you had to give just one reason for why Perlin chose the route of IEO for their token offering, what would that reason be?
Sure. So first of all, thank you so much. I know that lunch is quite consuming. Dad joke. And secondly, Andrew, thank you for doing your homework. I actually got into cryptocurrencies and blockchain and Bitcoin 2014 because after raising $400 million doing carbon trading, the lack of government support meant that effectively all of my carbon credits were valueless. And so from there, we started investing into non-government denominated tokens, e.g. Bitcoin. So coming back to your question, Christine, so Perlin was quite a mature company. So we raised through 3 rounds in 2017 and 2018. We were funded already to the tune of 6 years runway, roughly $50 million. And we also even had backing from the Singapore government. And we have a partnership with the ICC, so the International Chamber of Commerce, which governs all trade internationally. It's 100 years old. So we were really quite a mature business, a mature project, and a mature network. Okay. And where we saw it as is we wanted to go from 83 institutional token holders to as wide a range of token holders as possible. So when you look at that, looking at the IEOs, we then did due diligence across all of the different platforms. In the end, we opted for the IEO to be on Binance Launchpad. Again, it was also a two-way inspection. So Binance really spent conversations started 12 months ago. It ended up taking 8 months, 10 months roughly. We ended up even winning one of their hackathons. But eventually, we were offered a position. And just coming back to how we designed the token, and I can go into more detail later on, but it really was about how do we optimize and maximize the number of token holders. So our projected sort of numbers were something in the order of 50 to 60,000 people going for tokens. We ended up with 42,000 token holders at the end of the airdrop plus wins. And you also have to optimize so there's a suitable distribution curve where you have enough winners that win a substantial enough amount that they are happy. So just coming back, the 3 drivers were, 1, we also made sure that we had a working testnet, a real utility to the token. 2, we then wanted to make sure that we had the widest distribution, especially from the community. And 3, we really wanted to favor a platform where there wasn't huge, and actually we intentionally did not want to have huge pumps and dumps. And to that effect, the reason for that was we are partnered with really very, very respected institutions, ICC, Singapore government, others. So obviously we're unable to sustain where there's a huge price differential and then a huge price decrease and then huge amounts of community issues. So it's really just how do we balance that out?
Right, so no wide pumps and dumps, broadest distribution. Zhong, do you want to add, what does the IEO, and given the explanations for why Perlin had chosen the route of IEO, what does that tell you about the appetite of crypto investors today, their maturity today? And coming from the regulatory point of view, is there any concern from regulators about this new innovation?
Yeah, I think for someone who has been from the capital markets and the other 2 panelists on this panel as well, it's sort of a bit like Back to the Future, right? So what started with ICO, which is sort of supposed to be self-initiated and sort of fundraising activity, is now sort of picking up the trend of going back to exchanges, which are actually centralized platforms, because of liquidity, because of the cachet of the investor network and stuff like that. It's to a certain extent it's a good development in the sense that that means people want trust, and the trust is not engendered. Well, it's engendered, I guess, at a blockchain conference in the technology, but also engendered by the people and actually needing people to do due diligence on the projects and on what's sort of going on with the projects.
Gotcha.
So it's a good sign of the market maturing and the demand for more due diligence and more information and more verified information about the projects. From a risk perspective, I guess again, taking lessons from the past with the traditional markets is you worry about the conflict of interest from the exchange, which is, are they, sort of taking fees for the listing, and then when they list your coin and then they trade, they also, take fees, right? When your coins are traded. So that sort of conflict needs to be managed. And I think we're looking at ways to sort of manage that.
Yeah. But those are two really good points. People want trust, and also that this could be a sign of market maturity. Kayvon, I want to know, why isn't it that we haven't seen Coinbase move into this space? And is this something that Coinbase is looking into as a viable new token offering vehicle?
Yeah, absolutely, Christine. So great question. Maybe just quick intro from my side before I answer your question. So I represent Coinbase's institutional business for the Asia region. I'm based in Tokyo, started about 2 years ago at Coinbase. So in terms of how we think about the IEO space, but more broadly, the capital formation space, we think there's a real interesting opportunity there for Coinbase from two perspectives. Number one, if you think about what's important for an IEO, as Dorjee just mentioned, one is distribution, like how many potential investors can you reach? The other one is trust, like how do I know that this thing is a quality asset? And I believe that Coinbase really excels on both those measures. We have over 30 million customers globally. We're serving over 100 different markets. So we definitely have the ability to reach many customers around the globe. And the other one is trust, like being most trusted and being easiest to use is a core element of Coinbase's brand. So I think it's sort of fair to expect that if Coinbase listed an asset on our platform, whether it be an IEO, whether it be an asset that's already traded elsewhere, there's an expectation that that asset probably meets a certain minimum quality bar. And one thing about Coinbase that's different from other exchanges that are more focused on the active trader is that we actually do have many customers who don't really know much about crypto, who are relatively unsophisticated crypto investors and traders, and so that element of trust becomes even more acute. So in summary, there's a big opportunity for Coinbase in that space, but at the same time, there's a big element of responsibility, right? The flip side of having those 30 million customers and the fact that they're not very sophisticated means that the onus on us and the responsibility for Coinbase is to be extremely careful in terms of what we put in front of them, how we package it, how we make it available to them. And the other part of that is respecting relevant compliance and regulation. We're regulated in all of the markets that we serve. We take that very seriously. That's one of the reasons that we are the most trusted. So outside of that market opportunity I just described, we would not go forward with any offering without having a very careful dialogue with the relevant regulators to make sure it's okay in all the jurisdictions that we serve. So that's a summary. So I guess in a nutshell, Coinbase is carefully exploring not only the IEO space, but more broadly space including sort of STOs. I can't make any sort of formal announcement right now, but say stay tuned and you may see some news from us later on in the year.
But speaking of the kind of regulatory compliance concerns and also about the kind of responsibility that an exchange has with these IEOs, Dorjee, do you want to hit on one of the reasons why Perlin had chosen Binance as the exchange to go with in comparison to other exchange platforms that are also hosting IEOs, and some of the concerns that you had about how exchanges are kind of the trusted broker in this exchange?
Yeah, absolutely. So, everything is comparative. So if you're trying to outrun a bear, you want to have a fat guy next to you. And right now in the crypto space, there are very limited trusted counterparties. And I speak very frankly, I'm sure everyone in the room knows that there is a lot of confusion in terms of where revenue is being made and how that gets balanced in terms of conflicts. So we were, in our due diligence, we were approached by some exchanges which actually asked for up to 20% of tokens. And we were quite suitably obviously shocked and unable to even consider such offers. There was a lot of requirements for a certain amount of money for market making, but the implication was that money would be used to drive certain types of dynamics, which obviously are questionable and gray. And there was also like a lot of questions in terms of due diligence. So it's kind of like the harder Binance made us work in terms of showing our tech, showing our functional prototypes, showing our legal documentation, the more comfortable we felt because our counterparties are 100-year-old institutions and governments and big corporations with 190 billion in revenue. So from our perspective, just coming back to your point, I think any project that is currently considering IEOs or other types of listings, you really need to look at what are the processes and what are the fees and what are the hidden types of requirements. And then secondly, I think just from a counterparty perspective, after looking at what's out in the market, and again, that market may very well change very soon, Kayvon, and my number is on my business card, it's under my name, feel free to dial. But if there are other trusted institutions with huge user bases, then that's going to dramatically change accessibility. And so coming back to your point, that's why we went with Binance at the time.
That's actually a good point that I want to come back to you, Kayvon, about. Coinbase is a trusted institution. It's one of the largest exchanges. What would you do differently than Binance or than OKEx, Huobi, all these other exchanges that are doing IEOs? Is there anything about the IEO process, given your guys' research into it so far, that you would mimic or do differently?
I think there's two elements where we would probably be a little bit different than some of the IEO models we've seen already. One is a focus on regulation and compliance, right? Which is something that traditionally hasn't been a key part of existing IEOs. As I said, working with regulators to make sure whatever we're doing is kosher with respect to whatever customer base we're serving. The other part is, I think, educating the customers about what this thing is. Like, we have a new IEO for this new asset. Like, is just a number that goes up and down on a screen, or does it provide some sort of real world utility and value? And so Coinbase earlier this year created a program called Coinbase Earn, which is a way of educating customers about new assets and new projects that come to our platform. By them going through these learning steps, they can actually earn some of the crypto in question, that hence the name Coinbase Earn. So there's the potential that we can use Coinbase Earn as a way of bootstrapping education about the new asset, such that they're not just buying a thing that they hope to go up, they can buy a thing that they can potentially use themselves or have greater conviction in holding.
Any other innovations that you want to add to that, Zhong, coming from the regulatory perspective? Those are the things that Coinbase as an exchange would possibly iterate on from the IEO process, which is really interesting to hear, but anything to add there?
I think I would echo what Kayvon has said about, first about doing the necessary check-in with the regulators. So I guess in Malaysia, we have taken maybe, I don't know, the brave step or the foolish step to classify all these tokens as securities. So securities laws will pop in and apply in Malaysia at least. So if Coinbase or Binance wanted to do something like that, they would need the necessary approvals and stuff like that. Education, of course, is something, investor education especially, is something that, we also look to the platforms to do. I would add that the third part that is not necessarily clear, or maybe two more parts. So the first part is about the custody. So once, the money or the cryptos have been invested, so how are they being safeguarded, right? And sort of closely linked to that is, how are they being eventually disbursed and utilized? And how can we trust that they are being disbursed and utilized based on what the project wants and based on what the project told people when they wrote it in their white paper, right? So I think the absolutely worst outcome we want is someone raise a couple $1 million and then buy Lambos, right? That's sort of the industry joke.
Unless it's a Lambo token.
Sure. Then question is why would you invest? But okay.
Lambos go up in price.
Yeah.
So I told my wife.
Yeah. So I think the post fundraising governance is actually a big part of what we're looking at as well from the SE's perspective on how people can play a role to sort of safeguard the interests of investors after it's been fundraised.
No, that's a really good point, and I do also want to dig in deeper into the types of investors that we're targeting with IEOs. Of course, ICOs was very broad, and as you were saying, it's like a back to the future where we're narrowing the number of people who are able to invest. Do you guys think that IEOs are bringing in new types of investors and new money into the crypto space, or would you say that it's basically like insider baseball? It's the same players who know simply.
Can I make a quick comment just to come back to a very good point by Zhong. So So one of the biggest negotiation sticking points when we were going through the IEO process was the token release schedule. So the token release schedule essentially dominates the conversation with Binance because they do not want a flooding of tokens that results in a heavily oversupplied token until you have price discovery, and there's a whole bunch of discussions that go around when and how. And so just coming back to your point about post-listing governance, so Binance was really strong with us saying, look, team tokens, 4 years vesting, right? All of the earlier investors, so they couldn't just pump and dump and flip and shill, all of them had to have vesting. You know, all of them had to have unlock processes. And that caused endless work for me, honestly. It was hell. And then even in terms of the pricing of the token, we had to do a down round, right? Obviously that was not determined by me because the last thing anyone really wants to do is to tell token holders that you have to do a down round. But we had to do the down round because according to the economics that they had developed in terms of market dynamics and the amount of time required. And now coming to Kayvon's point, my failure, I believe, in Berlin was we tried incredibly hard. There are Forbes articles about us, there's quotes, there's so much press, but even still, we failed to educate the token holders on what we did. We tried our hardest, and whether it's unwilling audience or our messaging or the way that we communicated, it wasn't 100% right. But you know, just the 2 points that I wanted to raise was one, the token scheduling and the pricing and price discovery, all of that, if it's managed by a competent exchange, they won't let everything blow up and then fall flat. And then there should be monitoring. And secondly, in terms of having the right audience. So right now we are very happy to have the token go sideways for as long as it takes for an educated community to join. Because we don't really want that,
Do you want to add a few comments to the sentiment just shared about the token issuance schedule? Given your guys' research and looking into IEOs, what have you guys been thinking about this very concern of pump and dump, of how critical a token issuance schedule is to this IEO process?
I think that would be a critical consideration. More broadly, I think, again, if hypothetically Coinbase were to evaluate a project for an IEO, we'd have to look more broadly about the quality of the team, the philosophy behind what they're trying to achieve, value creation for the world, how they think about making their asset available to investors in terms of like the schedule of the assets and everything else. So I think it's part of a much broader question about the vetting of the quality and the motivation of the asset issuer team.
Okay, gotcha. So coming back a little bit to that question of is the IEO a good crypto capital formation tool to bring in new money and in new investors? Do you guys foresee other trusted brokers outside of an exchange coming in to pull in new investment and new money into crypto capital?
I definitely do. So Berlin is predominantly based in Singapore because 80% of commodity traders and global trading companies are here. Who we're trying to attract is every time we facilitate trade on our blockchain, we're essentially taking away business from paper and from freight forwarders and letters of credit, all of the banks, et cetera. So we want to be a proxy for global trade digitalizing. So right now, everything is on paper. It hasn't changed for hundreds of years. A bill of lading, or letter of credit, all of this is in paper. So where we want to attract new users is we want to go to commodity traders, people who have traded oil, gas, coal, you know, any of the softs, the agricultural commodities. We want to attract the people who are either Forex traders. So these are all different pockets of users.
Gotcha.
Now, can we approach them through a Binance platform? Well, it's the best in breed today.
Okay.
But if NASDAQ or if CME or if some London Metal Exchange, all of these other types of players start coming into the community, we want to say, hey, we're a utility token that actually can proxy or have some form of, whether it's generalized mining or node rewards, that you can then trade on. Betting that, say, more palm moves on, palm oil suddenly becomes a tradable commodity, which has correlation.
So Zhong, you had said that there was like a conflict of interest in terms of exchange as being that broker. So do you want to explain a little bit more about what you meant by conflict of interest? And then tell me whether or not what Dorjee was saying about seeing New York Stock Exchange, CME. I mean, obviously that's the ideal, but any others in your view? Do you agree with that?
Yeah, I guess from a conflict of interest perspective, I think it's about the exchange having or not just the exchange, I guess, but I guess the exchange is more important in this case because they also do the secondary trading, the eventual secondary trading of that token and that they listed, and they obviously collect fees of the trading as well, right? So if they're already collecting fees for the primary issuance, i.e. the IEO, and it's actually in their best commercial interest, right, to list as many tokens as possible because you want as much fees, and then those have downstream trading. So that's the conflict. I think in terms of other players who might be interested, definitely the traditional markets. So I guess in Singapore is SGX, but in Malaysia is Bursa Malaysia. I think the traditional capital market people, players, incumbents will definitely be interested. There is no doubt that they have also facilitated capital formation in capital markets, so they're definitely interested. Even for we have equity crowdfunding and peer-to-peer financing firms in Malaysia as well, who are also interested and have shown that they might have some of the competencies required to sort of facilitate this sort of capital fundraising.
Yeah, good to watch out for these other players in the future. And I don't want to spend this whole panel just talking about IEOs, because another up-and-coming crypto capital formation tool is security token offerings. And I know back in June of last year, Coinbase had announced that it was on track to securing the necessary licenses for SEC-regulated securities offerings and trading. Kayvon, do you have any updates for our audience on that plan? How are you guys doing in terms of obtaining the broker-dealer licenses, coming out with regulated security token trading on the Coinbase platform?
Yeah, great. So update for you. I guess before I get to the update, just sort of setting the context more broadly about historically the way that Coinbase has thought about security tokens and why we got those licenses. So in the US especially, the regulators have sort of bifurcated the crypto world into things that are called securities and things that are non-securities, right? And we all know that in the vast sort of grayness of what crypto is, there's always an element of arbitrariness. So as Coinbase thought about expanding the range of assets we want to hold on our platform and serve customers on, we recognize that we don't want our customers to have to think about whether a thing is a security or not. We want customers to be able to easily buy, sell, hold whatever range of crypto assets that they want that we make available to them. And so about a year and a half ago, Coinbase acquired a broker-dealer, and with that, a broker-dealer license as well as an ATS license that will give us the ability in the future at some point to deal in security assets as well as non-security assets. And so where we are today is we're still in the process of digesting that acquisition and repurposing the licenses for use on our crypto-first platform. To be honest, I think it's going to continue to be not a slow process, but one that is measured and comes to market as and when we feel the security token space is ready, right? And I think particularly in the US, and I'd even argue globally, security tokens, tokenized securities, and all the rest are talked about a lot, but are traded much less than they're talked about. And I think once that dynamic starts to change, Coinbase will obviously follow the market demand and make these available to our customers where we can.
So in terms of estimated dates, any for securities or even IEO offerings?
On the security side, no, we can't give you any estimated dates there. On the IEO side, like I said, stay tuned. You should see some news from us in the next few months.
Okay, gotcha. And the other thing that's really great about having you guys on here is not just regulator exchange startup. Another is that you guys have geographical bases for your guys' operations that's different. So Coinbase HQ, obviously the US, Kayvon, but you're based in Japan, so you know a little bit about Japan regulation. Zhong, Malaysia, Dorjee, based in Singapore. So I'm curious about the jurisdictional differences you guys see in capital formation, and specifically because Kayvon just talked about the US kind of landscape for securities. Dorjee and Zhong, can you speak to what it's like for capital formation in your respective geographical bases?
Why don't I start and then
Dorjee
can have the last one.
I think from the pro.
With I guess one big development that has happened is that FATF has come out and said that everyone needs some form of regulation now, or if you want no regulation and ban everything, you need to be able to enforce the ban, which sort of also means you need some sort of regulation. I think with that sort of big development in the regulatory domain, more and more markets will look to have some sort of regulations in place. But I do think that every market will play to what is in their domestic market. So each market looks very differently, even in the traditional capital markets. So for example, if I could use the example of the US is very much a buyer beware, very disclosure-based sort of market. Malaysia is not really there yet. We need to make sure that there are adequate protections in place for investors in order so that people feel safe.
Okay.
So that's why you will see regulations evolve quite differently across different markets. I think for Malaysia, we have, I think as Andrew mentioned earlier, guidelines for digital asset exchanges now. And we're working on guidelines for, I guess the more general term is token offering sort of activity that covers ICOs, STOs, and IEOs, which is sort of what we're discussing today.
Yeah.
Which will come hopefully before the end of the year, if not early next year. I think the difference, I guess, practically is that we have introduced sort of the idea of a host. If people are more familiar with the Thai regulation, it's sort of not really like a portal, the ICO portal, but sort of similar, which is someone that actually comes in and plays the role of doing the due diligence.
Yeah.
So it's part of the increased sophistication of the market, but also the protection for the investors that there are, I guess, professionals, so to speak, that do the due diligence on projects before that they can fundraise in Malaysia. Yeah.
That's a good point.
Yeah, I guess my comment would be threefold. So for example, first of all, you've got a level of civil litigation in the US where if I get fat, it's because of Coca-Cola. So I'm suing Coca-Cola for making me fat. And you've got like the epic case where a person got burnt because of hot coffee from McDonald's. And you're like, it's hot coffee. Like, why is it McDonald's fault? So I think that in the crypto space, there is absolutely caveat emptor, like there is a definite buyer beware. Everything from the custodianship of who's actually holding the hardware wallet. If you lose your hardware wallet or you leave, crypto on your hard drive and then you like throw it in the garbage, easy come, easy go. And so I think that the evolution in that vector, in terms of the community, you saw this huge influx of people, 2017, 2018, and then, sadly, because of the way that the game was tilted, a lot of people got burnt. And so whether or not we get the consumer trust and have that come back in, that's an element to then coming to, example, Airbnb is illegal in Singapore, Uber, they're still illegal in London, but they're still operating. I think that there's a tipping point when utility outweighs existing influential authorities. So for example, the taxi drivers, they didn't want those startups in because it disrupt their money, but of course the users found greater benefit. The same should happen with crypto. So if I was Mark Zuckerberg, I would have totally played Libra differently. I would have freaking released it into the wild from a separate entity with all of these things done, and then I'd say to Congress, it's not my thing, it's a thing, it's on its own, it's happening. And then to then tell 1 billion Facebook users to just put the genie back in the bottle, you can't do it. So coming back to your point, why I like Singapore, why I'm based in Singapore is, they've said clearly, we're not going to New York Attorney General you, we're not going to grandstand and try and put you on a cross, we're not going to SEC you. Obviously you can't do fraud and there are going to be cases where they'll have to step in, but they're very consultative. That's why I think a lot of projects are based here. And Zhong, seriously, I'm a big fan of Malaysia. I think the human capital there is awesome. I think that it's a huge question mark about if a token is not a security, it's not a security. So I'd just be very careful in terms of, are you throwing the baby out with the bathwater? Because the reason why STOs aren't traded is the returns are, there's a lot of reasons. But are you painting yourself into a corner?
Do you agree with that?
Yeah,
would you say?
I think, like I said, we craft regulations for our market.
Okay.
Definitely, I don't pretend to be the best practice for anybody else. I think from a regulatory perspective, from Malaysia's perspective, I think we took the hard stance to say, forget about trying, and we get this all the time, right? This is before we have regulations, which is everyone will come and tell us, we're a utility token, we're not securities, don't regulate us. we don't want to be regulated, blah, blah, blah. Favorite argument. I think sort of the step that we took was to say that, don't argue with us anymore. You are fundraising. If you are fundraising from the public, and I guess the way we have crafted it has some nuances in there, where you are, using your tokens as some sort of fundraising activity, or you're inducing people to trade for some sort of financial return, then you will be captured as securities.
Yeah.
Yeah.
But are you designed, sorry, last point is, are you designed to protect consumers or to foster economic growth and innovation?
Yeah.
Question mark.
Yeah, I guess that's always the struggle for regulators, which is trying to balance both. And I think we are trying to strike that balance in the token offering guideline. Yeah.
And Kayvon, I just want to say quickly, do you have anything to add from Japan? I mean, any parallels you see here, any differences in terms of regulation that you want to add to this conversation before we...
Sure, yeah, quick comment on Japan, where I'm based.
Yeah.
Japan was seen as being a market leader in terms of its approach to crypto regulation, one of the first major economies to recognize crypto and Bitcoin specifically as legitimate asset class, and that's been great. That clarity early on has been great. The flip side of that, unfortunately, is along with that legislation that recognized Bitcoin, it also put the lid or effectively ended ICO fundraising in Japan. So today, on Japanese exchanges, there's effectively a whitelist of what assets are available to Japanese investors, with the majority of the assets in the world not being available. And I would argue that in some ways that might stifle innovation in a market that was once very promising.
Well, thank you for that. We covered a lot of ground: US, Japan, Malaysia, Singapore. Thank you guys so much for listening, and thank you so much to my panelists for the great conversation.
Thank you very much.